mistake that ruins traders, why even good trades fail because of this mistake, and how to size trades so one loss does not wreck your confidence or your account. This video is about stopping the account damage, not about making money. Section number 1, what position size really means. Position size is very simple. It's how much money you put into one trade. That's it. Not how confident you feel, not how good the setup looks, not because you watch a YouTube video saying the market was about to blow up, not how badly you want to win, just how much can I lose if this goes wrong. If this trade goes up instead of down, how much can I lose if this goes wrong? That's it. Most traders never ask this question though, and that's why they panic. Section number 2, why good setups still blow accounts. The truth that nobody likes, you have to have a great setup. Well, you don't have to have, but let's just say you have a great setup, perfect timing, and a very clean confirmation. You can still lose the account. You can still blow your whole account. Why? Because you were sized too big. When size is too big, your heart races, you start sweating, you start running around, you exit early, you refuse to exit at all sometimes, your hands start shaking. It's not that the trade failed, because most of the time we come back and we look and the trade did exactly what we thought it was gonna do. The size just broke your brain. Section number 3, the pain that this creates. So this is where the real damage happens, because when you size too big, it leads to panic selling. Even when the trade was going to go in your favor, you revenge trade, you overtrade, you give back profits, and the worst one is you stop trusting yourself. And that's why people quit within their first year of trading, and why there are blown accounts within the first 90 days of funding a beginner's account. It's not because they can't trade, it's because you're giving up. Because every loss feels very traumatic. You're literally getting PTSD. Risk management exists to lower that emotional pain. Section number 4, the very safe way to trade. So here's the rule beginners skip. You should be able to lose the trade and almost feel nothing. No stress, no anger, no rush to make it back. Just close your phone, close the laptop, move on about your day, right? If one loss is ruining your day, your size is wrong. That's the biggest signal. Small losses keep your mind clear. And clear minds make really, really, really good decisions. Nothing makes a better decision than a clear mind. And this is how your account survives to live another day. So section number 5, the mindset shift. Stop asking, how much can I make? Start asking, how much damage could this trade do? Professionals do not try to win it big once. They don't look for an infusion of cash and try to win it big. They literally try not to lose big. And that's why they last. Because they don't need confidence and they don't need all the things that we think we need. You just need protection. And your account position sizing is protection. So if losses feel very, very heavy for you, you're carrying too much risk. Point blank simple. In the next video, I'm going to explain why cutting your losses early feels wrong and how to rewire your brain to do it anyways. If one loss hurts you, then your size is most definitely lying to you, and I'll see you in part 5. Be honest with yourself for a second. By the time you're analyzing a chart, the trade was already decided. And if that makes you uncomfortable, good. Because that discomfort is the point that most traders miss and makes them quit within their first year when they're perfectly capable. So in this video, I want to explain something most traders do not want to admit. It's that the chart isn't actually where most decisions are made. The charts are just where decisions were justified. Traders absolutely love to believe that they're objective, which means things like you wait for confirmation, you follow your rules, you let price tell you what to do. We've all said those things, but that is not actually what is happening. What's actually happening is this: feeling shows up within you, and then the charts get involved. You don't automatically turn on your feelings when you open up TradingView in the morning. No, when you wake up in the morning, there's a feeling that is internally there. You do not wake up neutral, ever. You're never undecided, right? When you show up to a session to trade, you're already carrying either the good day from yesterday, the bad day from yesterday, the pressure to perform. It's the last day of the month. You want to make sure your P&L looks really great. Maybe you have some overconfidence from trading. There's maybe even some frustration that you feel, right? And once that internal state exists, the trade has already been leaning towards one direction. And the chart is simply permission at this point. And this is the part that nobody really wants to say out loud, which is fine, but it's true. You do not enter a trade because the setup was perfect. You enter because you want to be in the trade. You feel like this is the trade that's going to go great, it's going to shoot up, or that you don't want to miss out on a certain move, or you just want to confirm who you think that you are today. And the chart never decides. The candlesticks don't really decide. They just give you permission. It's just the way that you act out those decisions. But here is where traders actually get stuck for years, or they quit within their first year. It's because they get very, very aware of this. You will legitimately have a journal, and then you write things on the journal saying, I entered too early, I forced that trade, this was an emotional trade, I shouldn't have done that. And then you think in your head, oh, I see it on paper, I know what I did wrong, so now I can fix it because I know what I did wrong. But awareness was never meant to be the solution. That is why on the first of the month you can write down a problem, and then 30 days later you're writing down that exact same problem, and then a month later you're writing down that exact same problem again. It's because awareness only names the problem. When you're aware of something, you're aware of a problem, you're aware of something that you're doing, that doesn't interrupt the thing that you're doing. So you know that you're emotional, but you can still click the button, even though you're aware of it. You can recognize that you have the urge to want to trade, and then you can still go and trade, even though you know you're not supposed to. You can literally predict a mistake that you're going to make and repeat it anyways. That is not a lack of intelligence. It is a lack of containment. And you're going to journaling thinking that it's going to give you the structure and the containment that you need. But the traders that I work with didn't suddenly gain more insight. They did not become smarter or more intelligent. I only work with traders that already know how to trade. What they did is they stopped relying on awareness to control their behavior, because it simply doesn't work like that. It's never going to stop your behavior just because you now notice it. So if you've ever said, I don't know why I took that trade, and you wrote down in your journal or thought to yourself, I knew better, right? I want you to comment down below the word state and see how many people are also dealing with that same thing. And if it feels like your best intentions always disappear the moment the 9:30 a.m. Eastern Standard Time, the markets are open, as soon as it becomes Monday and now it's time to trade and all your intentions go out the window, it's because the decisions do not start on the chart. They start within you. And every day that you ignore that being the fact, it's going to continue to perpetuate itself. It's going to keep happening. So I want to give you 3 things that you can do immediately to interrupt this before the charts ever get involved. There's a private training that is linked in my description box that explains it clearly. It's free to watch. Definitely go watch it. But recording your mistakes is not the same thing as changing your behavior. So that is why you can have a journal full of insight, a journal full of records, and still blow your account. That is the gap that I'm going to talk about in today's video. You can write down the same mistake over and over, and you will still keep making it. Seriously think about that, because most day traders can literally show you a journal page that says, I overtraded, I revenge traded, I broke my rule last week, and then from last month, and then those same things from 6 months ago. So clearly, writing down these things does not fix it. If journaling automatically fixed your behavior, nobody would keep repeating the same mistakes. Because once you saw it and you wrote it in the book, you'd be like, bet, it's time to stop. But that is not what happens. Most day traders don't have an awareness problem. You're aware of the problem. You know what your problem is. You know what you wrote in your journal last week, last month, and last year. You actually have a containment problem. See, you're so aware of what you do wrong, but you don't have a structure that stops it from happening again. So when people say, I journal, what they're literally saying usually is, I record all of my mistakes. I've written down all my mistakes. But recording your mistakes is not the same thing as changing your behavior. So that is why you can have a journal full of insight, a journal full of records, and still blow your account. That is the gap. Most traders think they're journaling, but what they're actually doing is just logging data. You have a log of what you've done, and those are not the same thing. See, in this video, I'm going to show you what to actually journal, because right now you're writing down your ticker and your entry and your stop loss and your target and your risk and your P&L and your R multiple and your win or loss. You might write down how you felt emotionally, and then you say, oh, I wrote down all the things, I've journaled, done. But the really uncomfortable truth is that if journaling like that made people profitable, most day traders would already be profitable, because almost everybody does that. So why are so many traders still blowing accounts? Because awareness was never meant to be the solution. Writing down what happened does not change what you do. Just because you're more aware of what you've done doesn't mean you're not going to keep repeating it. You will keep repeating it. And most people stop there. They think that if I just see it enough times, I'll stop. And that is not how humans work. If awareness alone fixed behavior, nobody would do all the things we know are bad, like smoking and overeating and procrastinating, or in trading, revenge trading. People already know what they're doing. You know it. They just keep doing it anyways. So when a trader says, oh, I journal, what they're literally saying is, I document outcome of my trades. But profitable journaling is not about outcome. It's not about what happened. It's about your behavior. And here's the simplest way that I can say it that I'm going to offer you today. You don't need more data. You need more truth. You can log your trades. That is great to do. I'm not saying stop that. I'm saying there needs to be a layer of truth added in, because most journaling answers the question of what happened in the market. But profitable answers are what happened in me. It sounds so cliche, but the market is not blowing your account. Nobody's against you. Nobody's worried about your $1,000, $10,000, $20,000. Corporations are making billions of dollars a day. Nobody's worried about your $1,000 you're making. No one's worried about your 10K month. No one's trying to make you lose. It's your behavior. You have the same exact strategy, the same exact setup, and the same exact rules. You can have the exact same strategy, the exact same setup, the exact same rules, and true traders, two different people, will get two completely different results. Why? Because of who that person is in their internal state. That's why I say this all the time. You can mess up a perfect trade. There can be a 600% gain sitting right in front of you, and you miss it and you lose it. Not because the setup was bad, but because you were not in the right state for that trade to work out. So you were wrong emotionally, mentally, internally, and your journaling probably is not tracking all of that. So I'm going to show you what most people track, and then I'm going to show you what they should actually be tracking. See, most people track, did I follow my rules? Did I win or I lose? How much did I win or how much did I lose? That's very surface level. And that is not useless, but it's not what changes behavior. What we're trying to do here is change your behavior. What actually changes your behavior is tracking the patterns of yourself. What actually matters is not what was the ticker. What matters is what was my internal state when I clicked buy. I know it sounds so abstract, but seriously, ask yourself, how did I feel right before I moved my stop? Was I urgent? Was I desperate? Was I rushing? Not asking yourself, was this a good setup? Literally, like writing down. I was calm, I was neutral. Was I patient when I looked at it? Was I calm and neutral and patient when I looked at it? Because you can look at a trade in the wrong state and you make it look like something's there that's not there. But I want to say that because the same setup taken in two different internal states is not the same trade. This is where most traders lie to themselves. It's so easy to lie. Nobody can lie to you better than you because they say the setup was valid, which is fine. I mean, it's a 50-50 chance. Calls or puts, it's really not that hard. But were you valid, or were you bored, or were you neutral, or were you trying to make money and now you're trying to get back to green? Were you trying to feel better? Were you trying to prove something? Were you trying to feel like a trader? Your journal should expose that, not hide it. So here's what profitable journaling actually looks like. Instead of writing, I lost on ES negative 2R multiple, you write, I was frustrated from the last loss. I sized up slightly. I entered faster than I should have. I felt urgent. I didn't wait for the full confirmation. That's actually useful information because it shows you the real cause of the loss, not just the loss, not the market. It shows you. And this ties directly into the red flags video that I did where I talked about how certain behaviors mean you're about to blow your account. You might see yourself in a few of them. There's 10. Just watch that video right here. And those are the things that you should actually be tracking. Whichever ones you see yourself in are the ones that you need to be tracking. You can watch that video here. So if you overtrade, track what emotional state you were in before you overtraded. If you're known, you know yourself to revenge trade, track the thoughts that hit your mind right before you click. If you size up, track what story you're telling yourself. When you say things like, I'm due for a win, I need to make this money today, I think this is gonna just shoot up to the moon, I gotta get in, I think this is a good one. Those thoughts matter more than your entry price. You're arguing between a market and a limit order when your entry price doesn't really matter. It's those thoughts that are gonna create your behavior. And that behavior is what's gonna create results. And this also ties into the neutrality video that I did, because neutral traders don't just look neutral. We actually track our neutrality. We're not trying to convince ourselves that we're neutral. We build a system that doesn't allow for excitement to show up. So we actually notice when neutrality has left the room. We understand when our emotions, our excitement is showing up, our urgency and our pressure and our want to do something unaligned. We see that head on and we can stop it in real time. And that's the part that you're missing. You're observing things after the fact, and so you're not able to actually change it in real time when it matters, when there's money on the line. Every single day, your journal should answer just this one question: was I neutral today? Not, did I make money? Did I follow my rules? Did I da-da-da? All of that will be solved if you just ask yourself that one question, because you can make money on a bad day, behaviorally. But every time you make money in a bad way, that's dangerous, because some of the worst habits are built on green days, which is why I don't recommend you looking at your P&L at the end of the day and using that as a good system. Oh, I ended green, I ended red. That's not a good system, because you can win green using bad behavior and end red using good behavior. So you don't want to mix those things up, because you can break rules and still make money, but then your brain is just going to reinforce the wrong lesson. So your journal should also track, did I reinforce bad behavior today, even if it was green? That is high level journaling. We're leveling up our journaling. That is how real change happens. And here's another huge mistake. Most people journal after the trade. And honestly, I don't blame you, because it's a lot to write down all that stuff while you're trading and trying to get in and out and try not to miss the trade. Or if you're a scalper or intraday or whatever, it's a lot to journal while you're trading. I understand that. But the most important journaling happens before you take the next trade. Oh my gosh, you should be asking, how am I right now? How do I feel before this next trade? Not what happened earlier, what did I trade earlier, what was that last trade? You need to really be asking yourself about right now. Are you bored? Are you calm? Are you trying to force something? Are you feeling the need to fix something? Are you feeling the need to trade so that you can feel better about yourself? Whatever. Because if you don't trade like that, you're literally flying blind with capital. It's even worse when you have leverage and access to leverage and margin. So this is the part most people don't want to hear. But if you're still blowing accounts, it's not because you don't know enough. It's because you're not managing your internal state. And your journal is not designed to catch that. That's why you're watching this video. But that's why people say, I journal and it doesn't help. I see that advice on YouTube videos all the time. Just journal. But journaling doesn't work like that. I journal and it doesn't help. It's not that journaling doesn't work. It's just that you're journaling the wrong stuff, because nobody has really talked about it. Data does not change people. Patterns is what's actually going to change you. If you want the full system on how to structure this, not just what you write, but to actually contain your behavior, I break it down inside of the private training. It is free to watch. It is not a strategy. It is not for beginners. It is a containment framework for experienced traders who keep blowing their accounts. It shows you how to stop turning one bad trade into a whole blown account. You can watch it for free. It's like 15 minutes. You can watch it tomorrow at the gym or whenever you have time. The link for it is the first link in the description box. But here's what I want you to do today. Not tomorrow, today. Even if it's not a trading day, I want you to open your journal, and instead of writing about the market, write a page about you. How you felt, what you thought, what you wanted, what you were trying to fix. That one page will teach you more than the last 100 trades that you've logged. Because profitability is not hidden in the chart. There's no more information you can learn. When you want to scale your trading, it's literally about trading with more money. There's no other way to scale it. There's no skill stacking. It's once you find your edge, that's it. But your edge is neutrality. Find that neutrality through what I talked about in this video. The profitability is hidden in your behavior. And if you don't start tracking your behavior and you keep tracking what you're tracking in your journal, you're going to keep repeating the same cycle where you're writing the same mistakes over and over and over and over after months and months and months. It's going to be the same market. It's going to be the same you. It's going to be the same result. But the real work is how traders actually change with journaling this way. If you can write down a mistake and then go make that same mistake again, that means journaling itself is not the fix. That's clear. It means awareness is not the fix. Like being aware of a problem, being aware of an issue, being aware that you are doing something is not the fix. It's not the solution. You don't need more proof of what you're doing wrong. We have enough proof of that. You already have enough proof. What you need is a structure that makes it hard to repeat those mistakes. Because knowing that you revenge trade doesn't stop you from revenge trading. You know that you overtrade. And journaling, what you're doing right now, is not stopping you from overtrading. If awareness fixed behavior, every trader with a journal and a sheet of paper and a pen would be profitable. But they're not. Which means that the real work is not logging your mistakes. It's not making a record of your trades. The real work is building containment, contain your behavior, especially because you know how to trade and you're making money. You have to contain that so you can keep the money. This is why I teach this the way that I do. Not what did you do? It's how do we make it harder for you to do that mistake again? That's the actual result. If your journal is filled with the same notes, the same mistakes, the same patterns, it is not a discipline problem. You're not undisciplined. You're not lazy. It's a structure problem. And you can literally fix it. It's a fixable thing. But until you fix it, you're going to write those same mistakes down forever and you're going to repeat them forever. That is why I built the private training around containment. It is not a motivational talk. It is not more trading rules. It's actual structure that you can use in your trading every trading day that stops one bad trade from becoming 5 and turning into a blown account. If you're serious about changing your behavior, not just documenting your behavior, that's where you want to start. It's the first link in the description box. It's completely free to watch, and I'll see you in there because I'm going to walk you through how to do this for yourself. Listen carefully. This one is simple, but most beginners miss it. Most traders do not lose money because they're dumb. They don't lose because their strategy is bad. They don't lose because they watch the wrong videos. They lose because one trade is allowed to hurt too much. That's it. It feels like it's that simple because it is, because it's true. Everyone is busy tweaking their indicators and chasing a setup and following new, but the real problem is they haven't protected themselves. You haven't protected yourself from one bad trade ruining everything. So in this video, I'm going to show you the real reason 90% of traders lose and why nothing else matters until you fix this. Section number 1, the beginner's myth. Beginners believe, if I just find the right setup, I'll make money. So they study their patterns and they learn supply and demand and they watch YouTube tutorials and they back test strategies and they take screenshots of all their trades and they say, my strategy works. I just need discipline. I said this exact same line to myself. I did, but the truth is, if your strategy actually worked the way you think, why does one losing trade feel like it's wiping out weeks of work? It's because the real edge survives loss and a fake edge could never. It just doesn't hold up. Most beginners don't have a strategy problem. They have a risk problem. Section number 2, even the best traders, even good traders lose. You can be right on your direction. You can be right on the timing. You can be right on the bias, but you can still lose money at the same time because options doesn't punish you for being wrong. It punishes you for trading too big. Most beginner accounts do not die slowly. They die in 1 or 2 moments. One oversized trade. One, this looks too good. This is amazing type of trade. I'll make it back tomorrow type of trade. If one trade can hurt you badly, you never had control to begin with. Section number 3, the real reason. The boring truth that nobody talks about is most traders discover risk after the trade. They enter first and they hope the loss is not too bad. That's not trading. That's literally gambling with extra steps. Risk management is not something that you'll add later. It's not something that you think about when you're profitable. It's not something that you tighten up once you're consistent. Risk management decides if your account survives to live another day. So if you don't know how much you can lose, how much losses you can handle, and how often you can be wrong, then when you're trading emotion, you're not trading a system. You're literally trading emotion, not a system. Section number 4, the core reframe of all of this. Trading is not about making money. It's about not losing it. Anyone can make money on a lucky move. It's a 50-50 chance, up or down. It's a 50-50 chance. But only traders with defined risk can survive long enough to actually grow or compound their account. So if your account can survive 5 losses in a row, 10 losses in a row, a bad month, your account is already dead. It just doesn't know it yet, and neither do you. That's why beginners feel so stuck. You feel emotionally drained. You feel like you've overtraded. You're scared to pull the trigger. Now you're literally not wanting to take any trades at all. It's not because you're broken. It's because your risk is undefined. You have not defined your risk. In section number 5, I'm going to set up the series for you. Okay, here's the deal. I'm not teaching a new strategy. I'm not teaching a new indicator. I'm not teaching you a shortcut to profit. I'm teaching you how to stop letting one trade ruin everything. How to stop blowing your accounts and survive to trade long term. So the next video is risking the wrong amount per trade. We're going to cover the exact math. It's 3rd grade math, by the way. Anybody can do it. Why most people get it wrong, why even small accounts survive, and how professional traders think about risk. Once risk is controlled, everything else will finally work. So if you've ever felt like one loss hit way too hard, or you're chasing these red days and avoiding trading because you're having red days, or your confidence disappears after one losing trade, this series is literally made just for you. So subscribe and stop letting one trade control your entire future. Watch the rest of this series and stop letting one trade define your future. Risk is the only thing that really matters. And I'll see you guys in the next video in the series. Engineering. your wins in trading. My last video about red flags that quietly destroy your trading account. This video is the other half of that conversation, because it's one thing to see a problem and it's a totally different thing to actually install a solution to that problem. And most traders hear the word neutral and they think it's a personality trait, and it's just not. Like, you really think, I'm just not emotional, I'm naturally calm, I'm wired for this, I'm made different, I'm built different. And that is literally not how it works. Neutrality is how your system is built. And if your system is built incorrectly, there's no amount of discipline. Hear this, there's no amount of discipline or mindset talk that will save you. In my last video, I talked about red flags like emotional wins, brushing off your losses, trading to feel something, urgency after drawdown. That's all I'm gonna say here. You need to watch that video in detail. Again, it is linked here up in the corner. Now, those things are not character flaws. They are signals that your structure is missing. In this video, I'm going to talk exactly what that actually means and show you how neutral traders actually build neutrality as a skill, and it's not something that you have to force. It just becomes the default. It becomes who you are, right? So the first step is neutrality is created by math first, not mindset. Math over mindset. And this is where people get this so backwards, because they think they can think their way to being calm. A lot of traders tell themselves, I'm not going to revenge trade. I'm going to stay disciplined. I'm going to stick to a plan. But if your sizing is wrong, if you're leveraging too much money, if you think that having margin or having access to margin or leverage automatically makes you think that you'll be able to handle it, you're wrong. Because your nervous system is going to override that mindset every single time. It doesn't matter what you're thinking in your head. Your nervous system is going to overshadow that. So if one loss feels really heavy, if one red shifts your entire mindset, if one bad trade makes you feel really bad, that is not emotional weakness. There's no way to discipline yourself through that. It's just that your risk is too big for your nervous system. And neutral traders don't feel calm because we're special. We feel calm because one trade cannot hurt us emotionally or structurally. So the first way that neutrality is built is so simple. Your sizing of your trades so small that urgency cannot exist. So if urgency is possible, neutrality is impossible. That is what I want you to remember with step one. Now, step two, you want to design your account so nothing needs to be fixed. This ties directly to the red flags video that you can watch here. One of the biggest problems I talked about in that video is the need to bounce back. The feeling of, I need to get this money back. I need to fix what I just did. And neutral traders, we just don't feel that feeling. It's not because we don't care about money. I personally care about my P&L a lot, my monthly P&L specifically, but it's because our structure never actually creates a hole in our trading. So we don't allow one trade to put us behind or damage our confidence or trigger urgency or change our behavior. We just design our system so that losses are already absorbed emotionally. And that is not discipline. It is architecture. It's literally engineering your wins in trading. So if your account design requires emotional strength to survive, it's not designed for consistency, because you're a human. I hope that didn't go over your head. If your account design requires you to be emotionally strong to survive, it's not designed for consistency. So here's step three. You treat your internal state like your edge. This is honestly where advanced traders are separated, because in being a neutral trader, you don't just check the charts. We check our more than an opportunity. And this is the part I want to say, because I get comments on my page. There's this feeling of needing to make money or go in to make a trade. It's because you actually respect opportunities more than you respect your actual neutral behavior. So what we understand is that missing a trade is cheaper than trading misaligned, period. And this directly is going to solve multiple red flags from that first video. I recommend you go watch it. And you're no longer brushing off your internal state. At that point, you're building the internal state into your rules. They're baked in, so you never have to worry about it. Step number 4 to becoming a neutral trader is removing emotional spikes on green days. This is so big because us neutral traders do not celebrate wins emotionally. It's not because we're boring people. I might be boring, who knows? But y'all aren't boring. It's because we're trading emotional consistency. I'm not going to let a green day become an emotional event, period. Why? Because whatever you emotionally reinforce, your nervous system is going to want that again. So when you train excitement around the outcome of winning, now you're always chasing the next win. And subconsciously, you chase that feeling over and over and over. And guess what that leads to? Sometimes it leads to green, but 99% of the time it leads to overtrading, oversizing, forcing your setups. Neutral trader, let the wins be data, not dopamine. My green days are simply green days in my trading log, in my trading data. They don't really matter to me. I care about realizing those funds to my bank account. Step number 5 is normalizing losses instead of personalizing them. This is the secondary to what we just talked about. So in the red flags video, I talk about how some people blame the market or they dismiss losses casually, but neutral traders, we do neither of the two. We study without emotional charge, and we ask questions. We study our trades. We study our previous action, our previous positions, right? And we say, was it the market or was it me? And we adjust based on structure, not on identity. So what this means is what I'll do is I'll pull up my monthly P&L. I will go through all of my trades and I'll look at my data sheets and I'll look at all of my data and I will say, were these wins because I was actually trading who I was supposed to be? Were these losses because I wasn't who I was supposed to be? Or was it just a bad win? And that's how I go through my data. I don't say I'm bad, I suck, all these red days are bad. I say my process needs refinement. That keeps the ego out of it. The ego is gone. And that keeps neutrality intact. So step number 6 to becoming a neutral trader is build routines that protect your nervous system, because neutrality is fragile if it's not protected. Neutral traders, we have very boring habits. Consistent routines, consistent gym routines, consistent sleep, consistent breaks, limited screen time, clear trading rules. And it's not because I'm so strict with myself, it's because I understand that my nervous system is my execution engine. So if I burn out, then my strategy doesn't matter. You can have a 600% gain sitting as an opportunity and you completely miss it because of this. There's no way to out trade that. Your nervous system is your execution engine. You do not want to burn it out because it doesn't matter what you do, your strategy won't matter. This is exactly what most people miss after watching the red flags video. They see the behavior, but they don't change the structure. You went through the 10 red flags and you saw yourself in 3 or 4 of them, but you don't change the structure. So in my free private training, I walk you through how to build this, actually understanding the design behind your rules and how to create a system that makes all this automatic. It's the first thing in the description box. If you want to go deeper and watch that whenever you're ready, you can grab a coffee and watch it. It's about 15 minutes. With actionable tools you can actually walk away with and use starting on your next trading day. So step number 7 is you stop needing to feel like a trader. This one is so subtle, but some people trade to feel like they're in the game, like that you are this thing that's called a trader. And neutral traders don't need to feel like traders. We don't need action. We don't need validation. We don't need to trade because we want to. We only trade when the conditions are right. That's it. When identity is not attached. Because when identity is not attached, your neutrality becomes easy. So the real thing I want you to take from this video, if you haven't taken notes already, I recommend taking notes at this part. Neutrality is not emotional suppression. It is emotional irrelevance. Your emotions do not run the process because the process was built to not require them. So they're literally irrelevant. That's why neutral traders look really calm. It's not because we're calm people. Maybe I am. But there's nothing in my trading system that threatens me enough to go into an emotional swing anymore. And this is what I didn't have before. So I want you to take this because it took me months to figure this stuff out. So if you watched the red flags video and you thought, I see myself in about 3 or 4 of those, that's definitely me. I want you to think that that's a good thing. It's an opportunity to fix it. And this video was the opportunity. This video is how you fix it. So go back and watch this video 2 or 3 times and don't try harder. Just build a smarter system using what I literally gave you in this video for structure, because structure is going to beat willpower every single time. And if you want the full framework for building neutrality as a skill, not as a personality trait, I walk through it step by step in that private training. It is free. It's really short. It's like 15 minutes. You can watch it tomorrow while you're eating breakfast. And it's very practical. So the link for it is the first thing in the description box. Welcome to Charting the Day, where I show you how I make money trading stock options. Today's video is going to be on my trading view, settings, and everything I use to trade during the day. First, in the top right corner, my currency is in USD because I am in the US. But depending on where you're trading from, this will be very important. If you're using international brokers, I'm assuming that's where a lot of you guys would be changing it here. But majority of people will be on the US currency. The next thing that's very important is down in the bottom right corner, where we see a little gear that looks like a gear for settings. We want to make sure that our settings are on regular and the plus button. As far as the session, we want to make sure it's on extended trading hours. That is how we're able to see the different hours, and it demarks it by the color. So if I zoom in a bit here, we can see dark gray, light gray, white, dark gray, light gray, white. And that all is showing based on the extended trading hours. If I go to the same button and I turn it off, it'll show regular trading hours, which shows a gap between the start of the market. Now, it depends on what you're using it for, but as far as me and my trading, I love using the ETH, which is the extended trading hours. Next, we're going to go over to our general settings, which are the 3 buttons down here at the bottom. And we're going to click on chart settings. Here, this is what my symbols are on. You can screenshot this or just pause the video. And I make sure that my time zone is in UTC 5 because that is New York session for Eastern Standard Time. Here's my status line. Screenshot here to look at everything here. Here's my scales and lines. And then this is also where I changed the hour from military time to regular 12-hour time frame. Next is the canvas, which is basically the background. At one point, I had a ombre background, but I just prefer the white. It's fun in the beginning to have different colors, but it's nice to just have it decent. Then here, I really should take these off because I don't like those. It's the buy sell buttons in the top left corner. You can see it. I don't really use them. I don't really like them. So if you trade futures, that's good for you. But those buttons would be good for you. But I don't trade on futures, and also it's not necessary for me because I trade off my phone. Even if I do a futures trade, I normally do it on Webull off my phone. And here's what I have for events. So I want to turn my earnings on as well. And this is what it looks like. All right. Next, we're going to look at our drawings. So here are all my settings for my drawings. You can see everything I have favorited, which is the same things that are here up in this box up at the top. Okay. So I have the rectangle, which helps me to draw my supply and demand zones, horizontal lines, which help with my key levels, The second video on my channel shows you how I draw my Q levels every Monday morning. The comment box is great for just having things to type out. Like this is like this here is a box, and I normally just put my channel name there or use it when I'm teaching something. Trend lines is like this this here where you can just draw one line and continue to extend it. I love this for intraday trading. Have the circle, the circle, which is how I show touches. It just shows you, and I love that it's so easy to size. And you can also move it using the center, and then you extend it using the outside one. The arrow marker, which is going to have you draw an arrow up or arrow down. I like having this here for futures. And then I have the brush tool, which I use all the time. I keep clicking on this. I have the brush tool, which I use all the time during my videos. I normally keep it on red. Horizontal tool, which I also use for futures to show my levels. And then my cross lines, which I recently added just because this helps me with some accuracy. But even when I don't have that, we have these crosshairs anyways that naturally pop up if you hold down the screen in one area. The one thing I don't like is if you trade on your iPad and you press this trying to get the eraser here, the eraser only pops up. It can't save as a favorite. So basically, anywhere that anywhere at the top, all these things are favorites. On an iPad, it won't put the eraser up there. I don't know why, but if I trade on my computer, it will allow me to draw that, but it'll allow it to go up there. But if I'm trading with my iPad, it will not put the eraser tool up there. Don't know why, but that's just that. Next is the FX tool here, which is indicators. I use the route key buy sell bars, which is the second one. These are all the other ones that I have used in the past that I just strategize with, but the main one I use is buy sell volume bars. I love these. They're actually, so let me just click it. It pops up. It put two. Let me just put one, and then this is what it looks like. And you can see the number on the side, so you can see, okay, volume is at 600,000, closer to the end of trading, but way back here, in most of the day, it's like all the way, like, what is that, 100K? Barely. Like, that's not even a lot. And this was on Christmas Eve, so it's 11:30, and market was closing at 1 p.m. So that's why volume was so low during that time. Normally, it's popping during that time because that's a time where people are making decisions. But that is all of my settings that I use for my trading. As far as these up here, I make sure that this is on 2px, and I recently changed it to a different color so that when I'm teaching and stuff like that and using them, I don't confuse myself, because these lines here, I keep here all week. Those are my key levels that I use. And so when I am teaching or I click the screen on accident and it adds a line, sometimes I can't tell which one is wrong. So I switch the color just so I can know, okay, that one is yellow. It shouldn't be yellow. Well, let me switch it back to yellow. But yeah, that one's yellow, shouldn't be on the screen, and I can be able to delete it. I keep everything else pretty standard. Again, the brush is red just because I just like it like that. But I really should up the size. I kind of like the bigger size too. And yeah, basically I just switch between like a pinkish color and a red color. That's literally everything that I use for trading. I'm very simple. I don't use any indicators. I don't use anything besides trend lines, chart patterns, candlesticks. And I've made $5,000 in my first month trading. I'm 7 weeks in. And so this is definitely possible for you if you want to trade with just the basics and you want to trade fundamentals of supply, demand, support, resistance. That's fine. And yeah, so this is literally how I trade. So I'll see you. And this is how my entire account is set up. If you have any questions about what I personally do, like here I have the 1 minute here, but that's not really like a setting. It's just on the 1 minute. And then you can also flip through all of, like, these are all of the stocks that I trade. But I normally only trade SPY. I check between SPY and mini ES, so that's why they're next to each other. But I normally just have it on ES, and that's really simple. I just posted a video about what I use for Webull. So this is everything I use for TradingView, and I just showed you everything I use to paper trade on Webull and futures. So you can go ahead and watch that video if that would also be helpful, and I'll see you guys in my. If you're learning from this, make sure to say, because most day traders know what to do, they just never execute it. You will pay market tuition for the same mistake 10,000 times, and the market doesn't care. There's no limit on how many times you can pay for a mistake. Like, you're in the game of protecting your neutrality. You get paid for doing that. You get paid. And that is how your accounts are going to slowly bleed by 1,000 paper cuts. You lose all of your humility and neutrality, which are the two things that you need to be a profitable trader. Talk about yourself on a red day and how you talk about yourself on a green day is literally the split that's dangerous. Let me say something that might sound a tiny bit uncomfortable at first, but most day traders do not blow their trading accounts because of strategy. They blow their accounts because of who they are while they trade, not who you think you are, not who you say you are, but who you actually are in a moment during your trades. And this can be emotionally, energetically, and most importantly, behaviorally and habitually. And I want to talk through some red flags that I've seen over and over that quietly tell me that account is most definitely in danger this month. And it's not because you are dumb, it's not because you're lazy or you're not disciplined. That's not a good excuse. And it's really not the real reason. It's because your internal state is not aligned with what the environment actually requires. And I did not just make these up. These are patterns that I've watched in real time while being in large trading communities, while teaching my own trading students, while having my own coaches, literally with traders who have experience. My friends who are traders, with people all across the board who technically know better, and yet they still carry the same behaviors that almost guarantee instability every single time. So I want you to listen to this, not to judge anybody else, but to see if you recognize yourself in any of what I'm about to say. Because if you can catch it really early, then that's great, because you can fix it early. So the first red flag is you blame the market on a red day and then you praise yourself on a green day. This is a huge one. When you have a red day, it's the market was choppy. There was some news that came out, and sometimes the market is choppy. Sometimes there is some news that just randomly comes out. Other things like, oh, it just reversed on me. Oh, that's just trading. This is just the cost of business, right? All of these things can be justified, but let's be honest. You say that when it's a red day, but then when you have a green day, it's, I didn't make any mistakes. I executed perfectly. My patience is elite. I know what I'm doing. I'm so in sync with the market. And the split between those two, between how you talk about yourself on a red day and how you talk about yourself on a green day, is literally the split that's dangerous, because it tells me something about your identity. It tells me that you are taking ownership when it feels good. You're taking ownership of the profits when it feels good, and giving away ownership when it feels bad. And that means that you're not actually neutral. You're not actually aligned. You're protecting your self-image instead of studying your behavior. And real alignment is going to look like something like this, right? You have a green day and you're going to say, what did I do right structurally? What are the things that I did that resulted in this in my behavior? And then when you have a red day, you're going to say, well, what did I do wrong structurally? What actually happened? not asking yourself that stuff emotionally, not blaming yourself, not with the drama, because that is where I used to actually talk about myself in a really bad way because I knew how to trade, but I would have a red day and I would blame everything but myself. And then when I started to look towards myself, I could only do it through shame. But I want us to start talking to ourselves through structure, because if you can't look at a red day and calmly say, here's exactly what happened. I was off internally. I skipped XYZ steps. I didn't follow the procedure. I did not do what I was supposed to do. If you can't do that, then you're setting yourself up to literally repeat it. We have many red flags to go that I'm going to explain so deeply. So go ahead and hit the subscribe button so that you don't miss out on other videos just like this. The second red flag is you celebrate wins extremely emotionally. This one is so subtle, but it is huge. You get really hyped after a win. You get amped up. You start playing music. You start feeling like you're the one. You're on one. You start feeling this spike of emotion. Your energy just goes to cloud 11. We're not on cloud 9. We're on cloud 11. All right. When that happens, that means your nervous system is attached to an outcome. And at that moment, when you attach to an outcome, you lose all of your humility and neutrality, which are the two things that you need to be a profitable trader as far as your internal state. So here's actually what most people don't want to hear. Is that if you're emotionally high when you're green, you will be emotionally low when you're red. It's not a personal thing. It's literally how we're wired as humans. In our nervous system, you cannot train your system to only spike in one direction. You cannot try to be neutral when it's red and then always be happy when it's green, or vice versa. And you can't expect it to not swing in the other direction, because neutral traders don't get high on a win. We don't get crushed by losses. We actually do care about our trades a lot. I care about my monthly P&L a lot. But it's because I actually understand the fundamentals of it, that when your emotion spikes, you create future emotional debt. And I'm going to explain that, right? When you're celebrating an outcome, and you're playing music and you're getting amped and you're riding that high, that is the red flag. It's not because wins are bad. It's because you're attaching your emotions to the outcome instead of the behavior that led you there. Who was I being? What did I just say I was going to do that I did? What rules did I follow? That is what you need to be focused on, not the actual numbers or the win. And the attachment to the outcome is going to show up in the next drawdown. Red flag number 3 is you brush off your losses casually. This one looks so mature on the surface. I've seen experienced traders do this, but it's actually not mature from my viewpoint. This is just me and my own ideal, right? When you have statements like, oh, well, it just happens. It's just trading. I lost 3K, whatever. The market just reversed. Who cares? It sounds very mature on the surface. It sounds very calm, but it's actually avoidance, literally. Because what you're doing is you're skipping your internal audit. That behavior that you had that made that red happen, that made that red trade manifest, you're skipping that internal audit. There's a difference between acceptance and dismissal. Acceptance is when you say, I see exactly what happened and I take responsibility for my role. But dismissal says, I don't want to look too closely and I'm just going to move on. I don't actually want to dig deep into what I did wrong or my wrong behaviors. I'm just going to kind of just move on. I don't want to look at that too much. And dismissal allows patterns to live. That's why this also is exposed in your journaling. And you don't need to shame yourself or spiral. You don't need to beat yourself up. None of that actually works. But what you do need to do is bring light to yourself. What were you doing internally? Did you not look at your internal state before you started trading? Did you stop and say, oh my gosh, I feel like I'm on a high from that big win yesterday. Maybe I should not trade the open. Maybe I shouldn't trade New York Open. Maybe not. Did you ask yourself about your patience level? Oh, I just got in a big argument and I tried to separate that and not look too closely at how that could affect my trading, but I went ahead and traded anyways, knowing that I can't really separate the two things, right? Did you talk about your execution? What did you violate on your own standard and your own rules. And if you skip all those things, you're teaching your system that misalignment is normal. And that misalignment is what you're going to continue to repeat. And that is how your accounts are going to slowly bleed by 1,000 paper cuts. The fourth red flag is that you don't take your internal state seriously. This is one of the biggest ones. Oh my goodness. If you trade while you're tired and you're agitated and you're distracted, or you had a really bad trading day and you treat it like it doesn't matter, that is a red flag. And it's because your internal state is part of your edge. It literally is the edge, BTW. Everybody knows support and resistance. Everybody knows supply and demand. Trading is not just the charts. Your edge is literally who you are as a person. It's either calls or puts. It's really not that much of a complicated system. It's who you're being. So yes, your internal state is literally your edge. If you don't check your momentum internally, you're gambling your execution. And trading is not just the charts. It's decision making under uncertainty. Either your nervous system is stable enough to do it or it isn't. But if you wouldn't trust yourself to make huge life decisions while you're in that type of state, why would you trust yourself with capital in a trading account? It doesn't make sense. Neutrality is not a luxury. It is a requirement of your trading. Red flag number 5 is you're trading to feel something. This one is super silent, but a lot of people trade to feel powerful and feel like they're active and feel like they're doing something. Or maybe you're just bored. Or maybe you feel some type of stress and you just want to see some green numbers on your screen. All of that is a red flag. And personally, I've turned all the colors off of my trading platforms. You can just change them to gray, black, and white. And what that's helped me to do is, one, be way more profitable, more than I ever could have understood how deeply the colors were affecting my trading. But also, even on your candlesticks, don't make them red and green. Change the colors of your candlesticks. It's going to help you so much to emotionally regulate. If you haven't tried that before, I definitely suggest that you turn off your colors. So yes, all of that is a red flag because now trading is regulating your emotions. I talk about this in my videos all the time, but once trading becomes emotional regulation, your account is no longer a priority. You're going to try to get your feelings to feel better under any means necessary, including wasting and blowing an account. And that is not a neutral operating system. And professional and consistent execution comes from, I trade when my setup is here, not I'm trading because I feel like it's time to trade and I feel like I'm just bored and I feel like I need to win and I feel like I feel all that. It's not gonna please. Needing a feeling is a structural flaw, but you can fix it. Red flag number 6 is you confuse activity with progress. You think that more screen time, more trade, more lives, more sessions, more charts are going to all equal better trading, and they simply do not. Actually, 99% of the time, from what I've observed, it makes your trading worse because now you're reinforcing something you don't want to do. Now you're reinforcing noise. You're reinforcing unnecessary information because, again, you already know how to trade. You're training your system to associate busy with profit. And you think that that is being productive, and it's really not. What's actually productive is sitting out and waiting and passing on trades that look good but not that good, are B plus, C plus, and you want to just take A plus, whatever your rules are. And so that is what helps you protect your capital and protect your neutrality. You're in the game of protecting your neutrality. You get paid for doing that. You get paid for being patient. You get paid to protect your neutrality and your humility. Red flag number 7 is your identity is attached to being correct. So if being right matters more than trading cleanly, then when your trade fails, you're going to defend a bad trade instead of studying them. That tells me your ego is in the process. And ego is so expensive in the trading markets. And trading requires you to detach from the outcome, detach from identity, detach from proving anything. And the moment that you need to be right, you're going to fight the market, and the market charges tuition for the hassle, period. That's why you will pay market tuition for the same mistake 10,000 times, and the market doesn't care. There's no limit on how many times you can pay for a mistake. And this is exactly why most traders do not ever actually fix their problem. You think you're fixing it, because you think your problem is entry and setups and knowledge, and it's not. Your real issue is lack of structure and never paying attention to your internal state. If you want, I break down the full operating structure I use personally, and for my students, I broke it all down inside of my private training. It is the first link in the description box. It is free to watch. How to build neutrality, building a system to where that urgency actually never appears, and how to stop one loss from turning into 5. Again, it is free. It's about 15 minutes. You can grab a coffee or a snack and watch it at the gym or during breakfast tomorrow. And the link for it is the first thing in the description box. You can watch it whenever you're ready. And let's get into red flag number 8. You tolerate misalignment because it's familiar. This one is so deep, but people are so used to chaos. You don't realize it, but people think calm feels wrong. So they subconsciously create instability. Instability that you're creating looks like overtrading, oversizing, breaking rules, chasing moves. Nobody's making you do any of that. You're actually sabotaging yourself by creating instability. And it's not because you want to lose. Nobody obviously wants to lose. Obviously, you're not trying to make yourself lose. But it's because your nervous system is more comfortable with that intensity versus neutrality. All the intensity that you feel around that instability is what your body is used to. And calm feels so boring to you. But boring is often where the consistency lives. Number 9, you don't have structural protection against urgency. If one red creates pressure, if one loss makes you feel behind, if one drawdown changes your behavior, it's not a mindset issue. You can say it is, but that's like surface level. It's actually the structure underneath it. It's most likely that your risk is wrong, and it might be right for your account and wrong for your nervous system. Have you taken that into account? Ask yourself that. It actually might be wrong for your psychology. I see this with my students that have margin accounts and leverage. Because you're allowed to have leverage doesn't mean that you can automatically handle it. So if urgency is appearing, your nervous system is telling you, this is too much for me to process. I can't handle all of this. And instead of trying to force through it, that's actually information, and ignoring it is very expensive, and the market will charge you tuition for that every single time, okay? And number 10, you don't respect neutrality as a skill. Most day traders respect entries and setups and strategies and indicators and blah, and very few respect neutrality as a skill. But neutrality is a skill. It is trained, it is protected, it is structured. If you treat neutrality like something that you can just have over time, it'll naturally come to you, you're gonna lose in the moment when pressure appears. And AKA, it's always gonna appear because that's the market that we're in. And neutrality is not a personality type. It's your environment plus sizing plus habits plus internal discipline. That is the formula. That's what it is. So the real truth I want you to take with you is that most blown accounts and all of your blown accounts were emotionally doomed before the trade even happened. The trade was just the trigger. That's it. If you recognize even 2 or 3 of these red flags in yourself, that's not a judgment. It's literally an opportunity, because the markets are going to open every single day except for holidays and maybe even the weekends, depending on your market. You have plenty of chances to start doing this today, start becoming aligned today, and change your results forever. And awareness means you can change. If you're aware that you have some of these red flags, you can change them. You don't actually need to be perfect to be profitable. You just need to be aligned. You don't need to be fearful, just neutral. That's it. But neutrality is built. It's not something you hope for. It's not something that naturally shows up as time passes and you're gonna have it when you hit 1 year. It's not gonna happen that way. You have to intentionally do what I'm saying in this video. So if you want to learn how to build a trading structure that removes urgency, stabilizes your behavior, and keeps you neutral after losses, that is what I teach in the private training. It is free. It is like 15 minutes, and it will change how you think about trading. is the first link in the description. All you need to do is enter your email to get access, and you can watch it for free. Most traders end every single trade the same way. You check your P&L, you check if it's green or red, you check if it was a win or loss, and then you move on with your day. And that's the problem, because money tells you nothing. It does not tell you anything. In this video, I'm going to explain exactly why your P&L and money at the end of the day does not tell you anything. It tells you nothing about who is actually in control. And there's one actionable thing you can do to change this right now. So after every trade, ask yourself, did I trade as the version of myself that I respect, or did I trade as the version of myself that wanted relief? So I'm going to explain what relief means, but this question makes you very uncomfortable, or it should make you uncomfortable, because it removes the hiding places. A win does not protect you in your trading. Relief trading is when you take a loss and you think you're going into the next trade or the next trading day calm and controlled and professional, you know what you're doing, but really you're just trying to find relief, because underneath it's driven by urgency. You need to feel okay again. You need to prove to yourself that that loss wasn't part of your identity, and that you need to prove yourself that you know how to trade. You need to prove yourself that you can escape a certain discomfort that you may have had from taking a previous loss. But I'm here to tell you, the most dangerous trades are relief trades that win. Because if you win that trade where you're trying to get money back, it reinforces behavior that eventually destroys your consistency. Identity aligned trades often feel very boring because they do not give you any dopamine. They don't validate your ego. They don't make you feel heroic. Oh, I broke through. I know how to trade. None of that is there. There's no arrogance that comes from it. They just compound, and money is the reward. Honestly, when you're a trader, money should be your reward. But it's more about something deeper, because most traders evaluate their performance based on the outcome. Did I win or did I lose? But those who are consistent long term evaluate based on behavior. Who was I trading as? That's literally the question. Who was in charge here? Was it my logic or was it my emotion? Was it structure or was it impulse? And you have to ask yourself these deeper questions, because the answer can really lie very deep. But most traders avoid this because it's honest without a reward. There is no dopamine. There is no external validation. There is no feeling like you're the best trader on earth. There's none of that. It's just about the truth. But identity drives behavior. And until your identity is addressed, strategy is not going to change anything. And if you do change your strategy, it's not going to last. The practice and the backtesting and the journaling is not going to fix your trading. It doesn't fix your trading. It aligns behavior with who you say you want to be as a trader. And that alignment is what creates the consistency. So if you've noticed that you're a trader who already knows how to trade, yet you still keep blowing accounts, I want to invite you into watching the private training in the description. It is the first link in the description, because this is not a flaw. This happens to almost every trader, and is a part of your journey that I don't hear talked about a lot, and I invite you to watch that training. I want you to comment down below, have you ever avoided asking yourself this question? You may have thought about it, but you have avoided wanting to answer this question because you thought ending the day green, or ending the week green, or ending the month green meant more than your behavior. I definitely want to hear that. I'll be down there in the comments reading your stories, but also responding, so I'll see you there. If you're learning from this, make sure to subscribe, because most day traders know what to do. They just never execute it. You might just think that your losses are always the market's fault, from the news to volatility to the reversals and all that stuff. But the brutal truth is that even the most perfect setup that's waiting right there with 600% gains, waiting for you to just snatch it right up, can still be completely messed up. And most traders don't even realize that. So chasing after better setups, better strategies, and better indicators may not be the problem, because I see it every single day with students who are legitimately intelligent in trading. They know how to trade. They know their setups and their risk. They know their trading math. It's all there. And yet they keep blowing accounts. The reason why is because the trade itself is not the problem. It's how they approach it internally. And by the end of this video, you're going to see why any trade, no matter how clean, how A plus, how perfect it is, can still be ruined, and what to do instead of just throwing more money at it. If you want to hear what I have to say on this topic, make sure to subscribe to this channel and smash the like button so that you don't miss other videos like this. And if you want to take this topic deeper, I have a private training you can watch for free. It's the first link in the description box. I'm going to break this video down into parts. Part number one, the market is not your enemy. The market doesn't care about you. I'm so sorry, but it's not out to get you. The reality is most traders are going to blame the market anyways. But if you actually think about it, every single loss you've ever had, doesn't matter how many of them, but were they all because of the market? Sure, some news hit that you weren't aware of. There were some setups that were invalidated, but the majority of blown trades and losses are you. It's your behavior. It's your approach. It's your internal state. And I want you to take a second and really consider that. Any trade you make, perfect or not, can be ruined if your brain is in the wrong place. And the part that shocks people is that you can know how to trade and still be in the wrong state. That's when the greenest trades turn red. And that's when your discipline is going to collapse. And when you justify just one more trade or justify over leveraging. Part number two on why your internal state is going to change everything for you, because it changed everything for me. I call it your internal state. And what I mean is the way that your brain feels and reacts while trading. Are you focused? Are you calm? Are you neutral? Are you carrying frustration? Agreed. There's some boredom, fear from the last trade. It doesn't matter, but even one tiny misalignment in your state is enough to blow a trade. It doesn't matter how perfect it is. You can see all of the signals and the math and the risk, and it will not matter if your brain and your mind is not aligned. You will make decisions you don't even notice until after the fact. But most traders don't even stop to check this. They trade because they know how. You know how to trade. They think that's enough. You know how to read a chart. You think that's enough. But the thing is, knowing how to trade is not the same thing as trading with intention. And so if you keep thinking your losses are the market, you're never going to get this. You're always going to blind yourself and feel like, oh, it's the market's fault. You're never going to actually want to look at this. But the market is a mirror of your internal state. And every loss is a reflection of the trader that you brought to the market. And the myth of fixing the loss, which is part three. This is where most people get trapped, because you take a loss and your first thought is, I need to get this money back. So you add more money to your account, or you push your leverage, or you reset your account and you push harder and you chase setups. And the worst part is that you feel like this is logical, because it is, because you already know how to trade. So why wouldn't you go? If you know how to trade, why wouldn't you just go back and try again? But the problem is you think you can brute force it. And that's exactly the wrong approach, because more money does not fix a misaligned internal state. Money can't fix that. Continuing a trade doesn't fix that. Trading again doesn't fix that. All those things do is stack more mistakes on top of the first one. And the kicker, really the funny part, the better you get at trading, the easier it is to lie to yourself. Because you can see the setup, you know the math, you've done this before, you've made profitable trades. You can rationalize literally everything. You can literally rationalize something that's completely misaligned. And that's where even the most profitable strategies are going to fail, when your state is not aligned. I made a video about the two types of losses. There's only two types of losses. A loss is either the market invalidating a perfect setup, or it was you breaking the rules. There's only two types of losses. The critical insight is that neither of them are fixed by taking another trade. None of them are fixed by adding more money or reducing or increasing your risk. Your job is not to fix those trades. Your job is to align yourself before the next trade. And in that video, I go deeply into how to do specific solutions for both types of losses, because they're not the same. You might be trying to fix one type of loss with a different type of solution, and it's never going to work. So watch that video to know what strategy to use for what type of loss. But the market is literally a probabilistic environment. Nothing is broken in the market. The companies and industries and the institutions making multi-million dollars every day don't care about your 10K month. They're not trying to get you out of the game. Nothing needs to be fixed because nothing is broken. And when you lose, actually nothing needs to be restored. The only thing that matters is your execution over time. And that starts with you, not your trades. Part number 5, how to actually start aligning. So how do you stop blowing accounts even when you know how to trade? You start by checking your internal state before every trade, mentally, physically, emotionally. You ask yourself very simple questions. Am I trading because I want money? Am I trading because I need validation? Or because I'm bored? Or because I'm calm? Or actually, I feel really neutral. I'm just ready to execute my plan. Because if you're not aligned, don't touch the charts. Even if the setup is perfect, because you will mess it up and you will leave your money on the table. You'll leave profit on the table. You'll make profit and go give it back. And even if that opportunity seems huge and you don't want to miss it, you're so much better off waiting until you feel neutral because it's cheaper to trade that way. It's a very expensive problem I'm solving on this channel. And this is not about discipline. It's about structural alignment. It's about actual structure. And your nervous system will guide your success. Or it can guide your failures if you let it. But if you want me to walk you through the exact framework my students use, and I use it too, to stay aligned, stop overtrading, I want you to check out the free private training that's linked in my description box. It's the first link in there. For part number 6, we're going to discuss some common internal traps. We're going to talk about some red flags. You can watch this video for the top 10 red flags of traders who are about to blow their account. Here's what I see every single day. Traders who are experienced and know how to trade, but still blow accounts because they ignore internal flags. Though number 1 is emotional entanglement from previous trades, 2, overconfidence after a green day or a green week and you ignore risk, you risk everything. Number 3 is frustration after a loss and trying to go get it back immediately. Number 4, being ego-driven, having ego-driven trading, proving that you're right instead of trying to prove yourself you can follow the rules. And number 5 is lack prioritization. You are trading for excitement, not strategy. You actually care more about these opportunities instead of your profit. That's just a summary. I recommend you go watch the 10 red flags video. But if you recognize those flags in yourself, when they pop up, you can actually change them in real time. And that is where your P&L actually starts to show the trader you actually want to be. The truth is so simple that any trade can be messed up. If your internal state is off, it doesn't matter. The most profitable traders succeed not because they're smarter or luckier. Succeed because we can control ourselves. We can control the thing that matters the most, and that is ourself. So we're going to stop blaming ourselves and we're going to start just observing ourselves and catch ourselves in real time. If this video hit home for you, I have the free private training that walks you through the exact alignment steps, the exact checks, alignments, and frameworks that my students use to stop overtrading and start trading as a neutral trader. The link is in the description, and I invite you to watch it right now. It's a very short video, about 15 minutes. Grab a snack and watch it before the day is over. Most day traders believe they lose money because they misread the market. My entry was wrong. It's because my stop loss was off. If that were true, if that were like the only reason, then improvement would be very simple. You would just fix the setup, you would just learn more, you would optimize the strategy and just fix it until it worked. Yet, most traders already know what they should do, they just don't do it. And that's why improvement isn't as what it seems. Like, this contradiction is the clue, because the truth is very, very uncomfortable. The majority of trading decisions are made before analysis ever begins. It's not conscious. It's not logical either. It's all emotional. Every single trade comes from an emotional internal state. A psychological posture that you're in is going to determine what happens when you open the chart, because your internal state is going to decide what you notice, what you ignore, what feels obvious to you, what feels urgent. So 2 traders can literally look at the same chart, the same ticker, and one waits very patiently, and the other one's going to force an entry. Same market, same data, 2 different internal states in the same exact market. And that is why post-market journaling fails majority of the time, because it assumes the decision happened during the analysis, and it doesn't. It happens before the analysis. So I'm going to slow this down, and in this video, I'm going to break down about your last impulsive trade. Don't look at your last worst trade. Look at your last impulsive trade that didn't feel clean. Before you entered, were you calm? Were you trying to make back a loss? Were you bored? Were you riding confidence from last week because you won a lot last week and you feel like you're just that guy or that girl? Most traders can't answer that question. It's not because there was no internal state. It's because you're not acknowledging it. And honestly, emotion does not announce itself. It doesn't say, hey, I am feeling very frustrated right now and I'm about to override your entire plan. This is an A+ setup, but I'm about to make you lose everything you made last week. And we don't notice it. And that's why awareness is so hard, because it is intentional. It's like a very intentional decision. And that's why before every trade, you have to stop for 5 seconds. You don't analyze, you don't put any key levels, you don't rationalize, you don't adjust the charts, you don't pull up 2 tickers to start just watching stuff. You first look at yourself and you label your internal state with one word. Are you confident? Do you feel rushed? Do you feel bored? Are you on a time constraint? You're trying to force a trade into a time window. Do you feel hopeful? Do you feel detached? Do you feel frustrated? Just label it with one word before you ever look at a chart, because your internal state is going to dictate what happens on that chart. It doesn't matter how much knowledge you have, you can still blow an account if your internal state is frustrated and you're trying to force a trade. And the reason why this works is because when you're naming an emotion, it creates separation. The moment you label it, you now are observing it. You're now aware of it. And that small pause, whether it's 5-10 seconds, is literally what can save your account. And most day traders skip it because it feels very soft. It feels very simple. I've come so far. You're telling me to just not do a trading thing. You're telling me just sit for 5 seconds and think about my internal state. Because this is the resistance is literally what's going to tell you what the problem is. Because under pressure, this is where control disappears. The deeper truth is that you do not need better discipline. You don't need more journaling. You don't need more praying. You don't need more meditating. You need to be more aware of how you feel earlier. Because by the time discipline shows up, the emotion has already been there. And that is what dictates what happens on the charts. And if you don't ever see that clearly, then nothing else is ever going to stick. And it's really not laziness if you haven't done this before. It's just that most traders usually skip this. And this is the foundation. Without it, every single rule is fragile. Every single rule, every single piece of experience you have cannot withstand an unaligned emotional state. This is where real change starts. If you're an experienced trader and you continue to blow accounts, I really want to invite you to watch the private training that is the first link in the description box. It's going to show you exactly why you're still doing it, although you know exactly how to trade and you have the experience, but you have a good running streak and then you lose it all. You have a great running streak and then you can't seem to make a win. It's going to explain that directly to you. I want you to comment down below the last time you had an impulsive trade. I really want to continue the conversation in the comments so that I can just get to know you guys a little bit more, and I'll see you down in the comment section. I believe that you can be a profitable day trader within the next year, and this is the #1 reason why I believe that about you. So the reason I believe that about you is because you're on this video and you already are a day trader. Now, the difference between the day trader that you are right now and where you want to be is only one thing, okay? And it's free. It's a thing that you already have. It's a thing that you cannot buy. And it's a thing that you were given at birth. Now, the one thing is called time. You already have time. You don't get to choose how much time you get, no matter how much time you try to give yourself more or less. There's only 24 hours in a day. And so because time is something that you cannot get rid of, you already are at an advantage to everyone else who doesn't understand or know or is willing to try day trading. You already have time. That's why you're going to be profitable. Because whether you like it or not, the market is going to open every single day until you pass away. except for holidays and weekends. And that's only if you don't trade crypto. If you trade crypto, great. If you trade futures, even better. So the timeline is that crypto is more available than futures, and then options is less available than futures as far as time-wise. So if you only have a little bit of time to trade, well, the time moves in this direction, all right? So most people, in my opinion, start with options, move to futures, and they dabble between these two. Me personally, I have no interest in crypto anymore or futures anymore. I only do options because that is what I am good at being profitable at, okay? Most day traders do not lack rules. You lack authority over yourself. Look at your rules. It's probably very detailed, thoughtful, intention. You probably spent money to try to figure this stuff out, but it is absolutely useless under stress. Why? It's because most rules are written to be reasonable, to be flexible. They're context dependent. When you go into the market, that's when you decide what your rules mean, which makes them perfect targets for emotional negotiation. So the uncomfortable truth is that you don't break the rules accidentally. You talk yourself out of using the rules that you know work. Like, you tell yourself, it's basically the same setup. I usually put a automatic loss, but I'm gonna manage this loss manually, right? Or I'm gonna just jump in because I don't want to lose this trade. Or you know you shouldn't be taking a trade, so you tell yourself, I'm just gonna risk less. And it's not reckless, it's just bargaining, it's negotiation. And discipline doesn't fail because you don't care. It fails. Discipline fails because emotion becomes persuasive. You're persuading yourself and talking yourself into doing things you shouldn't. So stop trying to follow 10 rules at a time, because this could be the problem. Choose one rule that invalidates a trade if it's broken. Just one rule that invalidates a trade that you're in or a trade that you're going to take. One rule, because then it's binary, right? It means you have two options, you just pick one. Either I'm in or I'm out. Either I take the trade or I don't. So here's a few examples, right? I feel rushed, so I'm not going to trade. I missed the entry, I'm not going to chase the candles. If my size exceeds XYZ, then the trade is invalid, I'm getting out. So the rule doesn't exist to protect profits, it exists to protect your authority over your rules, because most traders resist this immediately. But what if it's still a good trade? But what if I know what I'm doing? What if I've traded this before? That is literally the problem. You're already negotiating. Binary rules remove negotiation, and negotiation is where discipline dies. Discipline has never been enough. So here's what actually happens when you enforce this one rule. You feel a lot of tension. You feel a lot of frustration. You feel like you're being put into a box and you feel restricted, because that discomfort isn't about missing trades. It's about missing and losing out on emotional control, right? When you're negotiating, it's because you're trying to keep emotional control, because when I tell you you can't enter a trade, now you feel upset and mad and frustrated, and so you negotiate with your rules to override that, because the real issue was never the rules. It was your ability to override the rules when it mattered. And we have to stop that, because most traders rely on willpower, and willpower will always collapse under stress. Structure does not collapse under stress. If enforcing one rule feels hard, it's not a personal failure, it's a structural problem. So the structure of your rules is what separates consistent traders from talented ones that know how to trade but keep blowing up. And so if that is you, I invite you to watch the private training that is the first link in my description box. It's going to explain to you exactly why you know how to trade, yet you keep still blowing accounts. So I invite you to watch. The link is there when you're ready. And I also want you to comment down below a personal experience of the last time you felt frustration when you tried to give yourself some guardrails or some rules in your trading, and you decided to negotiate with them anyways, and how that led to a loss. I want us to start exposing that story so that we can stop doing it collectively. And I'll see you guys in the comments, because I love reading your comments and I'll be responding to every single one of the comments. Let me tell you why beginners ignore risk management, or why most beginners ignore risk management. It's because it's boring. There's no dopamine, There's no excitement. There's no screenshots of all the fun things, all the full porting, which means throwing everything in your account into one trade. That's what a full port is, right? There's no screenshots of that, but that's exactly why this works. That's why risk management works. So in this video, I'm gonna explain why boring trading saves your account, why exciting trading is what blows it up, and why you hate risk management, why you probably need it the most if you do hate it. So this is not about getting rich fast. This is not about keeping everything. It's about losing slowly. Why beginners chase excitement, section number 1. Section number 1, most traders want to feel good. They want big wins, big moves, big days, 400% a day. They are looking for excitement, but here's the problem. Excitement is not a signal. Excitement is a literal trap. And when trading feels exciting, let's break this down. It normally means, I'm not saying all the time, I'm just saying normally, it means you're oversized, you're emotionally attached to your trade, and you're probably likely breaking your rules. Professionals do not chase feelings, they chase survival. Can my account survive another day? And that is strictly through risk management. Section number 2, why boring trading actually works. Boring trading looks like this. Small size, few trades, long waiting in between the trades you take, 3 or 4 days in between each trade, short execution, in and out, right? That's it. There's no rush, there's no pressure, there's no urgency, there's no need to win today. That's the biggest thing. There's no need to get a win or get profit. Boring trading protects you from yourself, from that human error we have, because when nothing feels urgent, you don't make desperate decisions. Desperate decisions are what blow accounts. Section number 3, the pain most people are running from. Let's be so honest right now. People do not want excitement. They want to stop the pain. Stop the pain of giving profits back, blowing your account, feeling stupid after a trade, starting over and over and over again, refunding your account over and over and over again, buying a new prop firm, buying a new prop account over and over and over. Risk management does not promise pleasure, it promises less pain. And that's why it works. It removes the moments that destroy traders. Section number 4, why beginners resist this so much. It's because most beginners say, I know risk management, I just need some discipline. No. If you understood risk, you wouldn't need discipline, because you can't feel tempted when you've pre-decided your risk. Proper risk literally removes temptation. So when your loss is small, your brain stays calm, and a calm brain is never going to self-destruct and start placing revenge trades. Section number 5, the real reframe in all of this. So the shift that changes everything is that trading is not what you do to feel good. You're trading to stay alive. You're trading to keep your account alive, compound your money in your account. Exciting trading feels good now, but boring trading feels good later. Every professional trader that you respect chooses boring every single day. Not because they lack skill, not because they can't trade every day, not because they can't make money from trading, it's because they respect risk. Anton Creel says risk management is what keeps traders in the game. And this is what he means, this type of risk management. So if trading feels stressful, you're doing too much. Slow down. Stop trading as much. Lower your risk. Accept that it's boring. Accept that there's no screenshots. Accept that this is the life and industry that you chose, and it's not all caked up to be what you thought it was, but it's going to be the thing that can make you money. So in the next video, I'm going to show you the exact position sizing mistake that turns good setups into account killers. Make sure to watch part 4, because exciting trading really feeds the ego, but boring trading protects the account and it compounds your money. Let me say something very clearly. Most traders do not blow their account because they're bad at trading. They blow their account because they trade too much. That's literally it. It's not indicators. It's not any entries. It's really not even your strategy. It's overtrading. It's an obsession with becoming a full-time trader when that literally doesn't exist in this industry. So if you don't fix this, nothing else in the series of the previous 5 videos is going to save you. Those 5 videos built up into what I'm going to show you today, which is why people overtrade, why it always leads to blown accounts, and how to stop it before it even starts. To start saving your accounts from being blown, because this video is about stopping that pain. Section number 1, what overtrading actually is. So overtrading does not mean I take a lot of trades. I mean, any scalping trader or micro scalper is going to say they take a lot of trades. But what it really means is you're trading when you're down with money, you're bored, you don't want to feel losses that you previously have taken. And so what happens is that you take a trade and you lose. And that loss really hurts your feelings. You get your feelings all type of hurt. And so your brain starts saying, oh, I need to fix this. I need to fix this. I gotta, So what happens is the fastest way to fix the feeling, your brain is like, okay, what was the fastest way? Another trade. So the second trade that you take is not about money. It's about escaping pain. You're trying to find relief. And that is how your account is going to die. You're not even trading about money at that point. Section number 2, why people can't stop. So after you take a loss, people don't want profit. You want relief. You want relief from feeling stupid and from feeling dumb and from feeling like you're behind and feeling like you failed. And so you trade again and again and again. Even if you already know that you're trading to find relief, you already know you're trading and the setup isn't clean and the plan isn't planned, there's no risk management plan, the size is too big. Like at that point, the risk management has left the building, it's no longer here, you're no longer trading, you're literally reacting to everything that's happening, and now you're gambling. You're entertaining yourself with money, and a reaction trade is going to end the same way every single time, a blown account. Section number 3, how overtrading bypasses any risk management. So this is the really scary part. You can size your trade correctly, pick the proper amount of contracts, use stops, follow your rules, and still blow your account if you trade too often. Why does this even happen? It happens because you're overtrading stacks loss back to back, back to back, back to back, back to back. One loss hurts, okay, we already know that. But 5 losses in a row will absolutely crush your account. Not because the losses were big per se, but because they were uncontrolled. And this is why people really say, like, I don't really know what happened. My account just disappeared. Like, my account just got blown. No. You traded through pain instead of trading a risk management plan. Section number 4, how to stop it. It's very, very simple. It's not complicated. You do need hard limits. Limits protect you when emotions take over. When you feel like doing whatever you want to do, limits are what protects your account from blowing up. There's only a few, these 3, that are really great. Maximum trades per day, maximum loss per day, maximum loss per week. Once you hit those numbers, you're done. For example, 2 trades a day, you're done. Stop trading after 1 red trade, you're done. Walk away when the rule is hit. When you meet the quota, stop trading. Right? Those rules are not to make money. They're literally to stop the account damage. And not having damage is how your account survives. Section number 5, the big truth. So most people think, if I make more money, it's going to fix everything. If I trade with more money, it'll fix everything. Super duper backwards. What happens is, first, you have to stop the bleeding, and then your growth actually becomes possible. You can't bleed and grow at the same time. So risk management is not about winning more money. It's about surviving longer. Jack Schwager, who is a professional trader, even says, if you don't have risk management, you have nothing. Anton Krill, another Wall Street professional trader, teaches the exact same thing here on YouTube. Survive first, and then compound. So if your account keeps blowing, it's not because you need more knowledge, you don't know what you're doing, you don't have a strategy. Could be, but it's probably not. It's probably because you don't stop when it hurts. You just keep trying, and you keep convincing yourself that you're gonna keep trying, and you just never actually understand what's happening. So you keep starting over, you keep restarting accounts, you keep feeling like one day everything is gonna fall together, you just gotta keep trying. That's not how it works. This series is literally made for people that think like that, because I used to think that way, and I wish I had this series back when I was a beginner. So put those limits in place, rewatch this whole series, because once you stop blowing accounts and you stop having major losses, once that pain stops of that, everything else is gonna fall in line. So remember, if one bad day keeps blowing your accounts, this video is for you. And risk management is not about making money, it's about stopping the damage. Two traders can look at exactly the same chart, the exact same market, the same candles, but one pulls out money and the other one is giving the market money. They're going into debt, or they're just simply walking away empty-handed. And it's not the market's fault. So let me show you something really quick that flipped the way that I personally trade, because there's a line in Proverbs that talks about it's Proverbs 23:13 or 23:11. I think it's 23:13, where it talks about a poor man's farm may produce much food, but injustice sweeps it all away. And you don't really have to be religious to understand the wisdom here. So I want to just break this down, because even in the fitness term, right, I have a personal trainer, and my personal trainer has taught me a lot about how to get to my specific aesthetic goals for my body. But it's like, there might be someone else in my group, right, in my personal training, like group coaching, whatever, and I am getting the results that I want, but the other person is not getting what they want, right? Same thing, going to the same market, same candles, one person wins, one person doesn't. Same thing with this. We go to the same coaching program, eat the same things, right? But I am actually getting the goals that I want, but they're not. In that case, it's most likely because of the way that they actually do the other half which is the working out portion. So if we're both eating the same things, we have the same coach, we know we're both eating well, but I work out and they don't, guess what? It doesn't matter what else is the same. We're going to get two different results. And that's really the point, is that food is not the issue. It's the actual consistency behind how the person uses the food. Because me, I'm using the nutrition to my purpose of getting the body that I want. But what they're doing is they're eating and then they're not using the nutrition, and now they're probably gaining weight, or they're just maintaining weight, looking the same, or looking worse, or feeling worse. So that one person, so that's me, I'm taking advantage of the whole system, the whole program, doing exactly what my coach tells me to do, and then they're kind of half doing it, and they're getting their half results. So think about the Proverbs verse again, right? It talks about the farm. In this aspect, the market of trading is your farm. Every single day, it produces enough opportunity because it produces trillions and trillions and trillions of dollars circulating every single day. And somebody winning does not mean that you make less money. That's not how trading works. You cannot afford to believe that. One of the myths about trading is that, oh, well, you know, we're fighting against these buyers and sellers, and if I win, then they lose, and if they lose, I win. It doesn't work that way. That's not how the markets work, and you cannot afford to be believing that, because if you believe that, you're going to set yourself up to lose so much more than you need to, because that's not how it works. How it actually works is like a farm, right? You go in, you can harvest whatever you need to, and then guess what? Everybody else gets to harvest whatever they need to. My land doesn't contradict your land, and your land doesn't contradict my land. Everybody's land is different. The point that I'm making here is that most traders do not fail because the market is unfair. They lose and they fail, or they quit before their first year is even up because they never build the thing that can collect the opportunity. Okay, that's the difference. Think about it. If you're working out and you're eating right, you're going to get the body. But if you're eating right and you're not working out, you're not going to get the body. You can never capture the opportunity of all the good nutrients you're giving your body, right? That's literally the cheat code. Put good stuff in your body and use it the right way, and those two things together get you the body that you want. But what most traders think is they take one class, they watch one video, they practice one time a week, and then they think that that's going to translate into dollars and profitability, and it's just never going to do that. So if you actually want to be able to use the opportunity that you're looking at every single day, then my channel is definitely a great place to start. Everything is in one place, step by step, very clear for beginner traders, in a playlist. But if you want to watch my real life trades, watch me trade, and basically copy how I analyze the charts and copy how I analyze candlesticks, then my watch and learn playlist will definitely be for you. So that is basically how you turn all the nutrients from the food into muscle and to being ripped and shredded. It's the same thing. Use all of your market to extract the opportunity it gives you every single day. So I'll see you guys in my next video. Let's talk about the moment that ruins accounts. You're in a trade and it goes against you, and you know you should get out, but you don't. It's not because you're dumb. Everybody has had this moment at least once or twice or at least 100 times in our trading journey. Okay? It's not because you're dumb. It's not because you don't know better, because you do. It's because cutting losses feels wrong. In this video, I'm going to explain why your brain fights exits, why holding feels safer than it is, and how not cutting your losses is quietly or loudly destroying your account. This is about stopping your pain before it compounds into a blown account. Section number 1, what your brain is actually doing. So your brain is built to avoid pain. When you close a losing trade, that pain becomes real and the loss is literally locked in. The loss is not locked in until you get out of a trade. So when your brain says, just wait, it'll come back, don't make it real yet, it's literally holding on to the feeling of trying not to get that loss. Holding feels like relief. It feels like you're doing something good because you're not feeling that pain yet. But cutting feels like failure because you're locking in that loss. But relief is not safety. Section number 2, the lie holding tells you. So here's the lie. If you don't sell, you didn't really lose. And that's not true because the market doesn't care about how you feel. Losses grow whether you look at them or not. Whether you let the account die or not, like those losses are going to be there. And the losses are going to grow whether you like it or not. So holding doesn't renew the pain, it just delays the pain. And the delayed pain is usually worse because you're allowing that pain to grow bigger instead of cutting it early. Section number 3, how this blows accounts. So how this blows accounts is that one loss becomes a very big loss. You hold something that you could have cut at a $5 loss, and now it turned into a $300 loss. And that big loss becomes fear, and fear creates really, really bad decisions. When you see those numbers, those red numbers start to get bigger and bigger. So then traders skip the next good setup, or they go all in to fix it. Either you're completely avoiding trading or you're trying to fix it. You turn one bad exit into a bad month, and it's not because of strategy, it's because of avoidance. Section number 4, the simple rule that will save you. The rule is you decide the loss before the trade. Not during, not after, definitely can't do that. Decide it before. In options, you have a premium. Your premium is your maximum loss. Literally, how much you put on the line is literally your max loss. That way, exiting is not emotional. It's just following the plan. The loss was already accepted. The loss was already calculated. It's not reckless. It is calculated. And you're not giving up. You're just protecting yourself. Sizing small is not giving up. It's just protecting yourself. Section 5, time reframe. So cutting a loss is not a weakness. Holding a loser actually is. So strong traders don't actually wait for hope. They respect damage. The goal is not to be right. The goal is to stay alive. You can't trade if you don't have an account with money in it. So if you want to stop reloading your account, cutting losses is part of the game. If you want to stop funding your account, it's part of the game. So if you keep holding losses, the series is literally for you. In the final video, video number 6 of the series, I'll show you how all of this comes together and how to trade without fear of blowing your account again. Make sure to watch part 6. Pain is delayed when you let your losses run, and pain delayed is just pain multiplied. If you're learning from this, make sure to subscribe because most day traders know what to do. They just never execute it. I'm going to say something so simple, but if you actually want to survive long enough to make money in options trading, in futures trading, in whatever market you trade, you have to learn how to end on a good note. Not a high note, not when you start to feel invincible and you start to feel super successful and you have this ego about you. Not end when you're all hyped up and you're feeling like you're the smartest person in the earth. I'm telling you right now, if you do not learn how to stop trading, you will never be able to make it. Because money is the reward. Money is the reward that you get for your patience, for your skill, for your knowledge. Ego